let's take a look at Zomato, because that particular counter is now down about 3% or so, and we have Snehi to tell us exactly what went wrong with the numbers in the quarter gone by. A huge miss when you look at the numbers, the PAT, the EBITDA, or for the matter of fact, margins, Snehi.
Well, yes, so operationally, if you take a look at Zomato's quarter 3 numbers, it's a weak set of numbers coming in, because revenue is the only thing that is in line with what we were expecting at ET now. Revenue has come in at 5,400 crore rupees compared to 4,799, which is up 12.6% on a sequential basis. However, the series of bad news starts when you take a look at the EBITDA, because EBITDA has come in at just 162 crore rupees compared to 226 crores, which is down 28.3% sequentially. Net profit has taken a big hit, coming in at 59 crores compared to 176 crores, which is down 66.5% on a sequential basis and missing our polls by large. EBITDA margin also at 3% compared to 4.7% quarter on quarter, which is down more than 170 bits. So it's looking, revenue is the only thing that's in line. However, you have a PAT, EBITDA and margin miss coming in. Also key to know that there is no exception items, which means it's an operating mismatch that has come into the company, or an operating fault coming in. Now, segmental revenue, food delivery is up by 2.9%, quick commerce up by 19%, going out business has done pretty well at 68%, Hyperpure is also up 13.4%. What is ailing the EBITDA this time is advertisement and sales promotions expenses have come in at 521 crores, which is up 24% sequentially. If you take a look at the GOV from the press release that the company has got out, the B2C business GOV is looking healthy at 57% year on year. Food delivery GOV is 2% higher compared to a 5% poll that we had. So that number has missed, and they have also flagged off some demand slowdown when it comes to the food delivery business. However, what is done well is the quick commerce GOV that's come in at 27%. We were expecting 25%, so that's looking good. Going out GOV grew 35% quarter on quarter, and like for like also it's up 15% quarter on quarter. Hyperpure revenue has grown up 13%. The EBITDA drop they have attributed to investment in expedited new store openings and new customer acquisition in the quick commerce business. Moving on to Blinkit, some very positive news coming in for Blinkit, because Blinkit store count has crossed the 1,000 mark 1 quarter earlier than guidance, and now they're aiming for 2,000 stores by the end of FY25, 1 year earlier than the earlier guidance of FY26. So very positive move coming in from Blinkit. At least demand slowdown has been seen in food delivery, and District and Bistro apps have been launched by the company in quarter 3. That's the lowdown. Operationally looking weak, but it's the quick commerce business and the commentary for Blinkit that is looking very positive for Zomato.
But Snehi, to add to that, they've also mentioned that they're likely to operate in losses for the next year or so. What could that be on account for? I mean, is it a structural downturn in the business, or is it just going to be more aggressive acquisitions that would actually, suck up liquidity?
Absolutely. So it is the acquisition front that the company has attributed to their rolling out of campaigns on Blinkit. When you take a look at the festivities that are coming in, or marketing campaigns, ad spends, that is something that has gone up incrementally by more than 20%, rather 24% on a sequential basis. Depreciation numbers have shot up, which is why operationally, if you take a look at these numbers coming in, especially on the EBITDA and the PAT front, it's a big miss coming in from what we were estimating here at ET now.
All right, so that is all about Zomato, the numbers, the commentary coming in from the management. They are saying that, I will quote from the shareholder letter that they have, that we are likely to operate in losses for next year or so, but we do not expect them to be meaningful in the overall context of Zomato. That is the commentary coming in from the management. The stock right now is down and out in trade. It is down approximately 4.5% or over 4.5% as we speak. So let's watch out for that.